U.S. labor market hits a homer in October, smashing expectations as wages rise at its fastest pace since 2009. And on top of this, Apple beats earnings expectations, but year-over-year iPhone sales remain stagnant. What this means for Apple and tech stocks in general, coming up in just a second. I'm Justin CCS, and this is Stock Talk Today. According to an article on Yahoo Finance, in October, the U.S. economy created 250,000 jobs, topping expectations, while the unemployment rate held at 3.7%, matching the lowest levels that we've seen since 1969. Experts expected that the increase would be 200,000 in October, and they expected that the unemployment rate would hold at 3.7%. So 50,000 jobs beat. And on top of this, investors were more closely watching wage growth in October, which also rose 0.2% over last month and 3.1% over last year. And this is the fastest pace of annual wage gains since April 2009. Economists expected wages to rise 0.2% over last month and 3.1% over last year. So the US labor market hit its numbers for October and beat job growth by 50,000 jobs. And on top of this, President Trump tweeted out, "Wow, the US added 250,000 jobs in October." And this was despite the hurricanes. Unemployment at 3.7%, wages up. These are incredible numbers. Keep it going, vote Republican. Now, on top of this, Apple reported earnings after market close yesterday, and they reported an earnings beat, but only matched their sales year over year from last year to this year. And basically what that means is that Apple sold 46.9 million iPhones versus analysts' expectations of 48.4 million handsets. And Apple sold 46.8 million smartphones in the same quarter last year, and that's according to an article on Yahoo Finance. So what this means basically is that Apple, along with the rest of the tech companies, are actually resulted in Apple beating earnings, but actually ended up being down on the day after earnings report simply because they didn't reach the expected number of iPhone sales, and they only missed it by less than 2 million sales. And on top of that, also 46.9 million iPhone sales is nothing to say that was a miss is almost ridiculous. So what we're looking at with Apple is that this could be a pullback and a good opportunity to get in on one of the best companies and biggest companies out there, because it is currently trading down 6.53% with a 14.56 change, and so it's trading at 207.76 right now. So that's a good opportunity to get in at a lower price, simply because there are reports coming out that Apple may not even report on its number of sales moving forward, simply because they beat earnings. They shouldn't be trading lower afterwards simply because of a missed expectations in the number of sales, even though that number of sales doesn't actually it's not a bad number. It's an incredibly amazing number that they're able to sell that many units per quarter. Now, what this means for the tech companies in general is basically, even though, at the macro view in the stock market, what we're looking at is that the U.S. labor markets gave an early boost to the stock market this morning. However, the market has pulled back, and we're seeing the NASDAQ getting hit hardest right now, and those are your tech companies, and that could be on the heels of Apple reverberating through the entire industry. And so we're keeping an eye. Basically, we're keeping an eye on Apple right now, seeing if it's going to be able to hold at above 200, and if it does, then we're looking at it as a great opportunity to get in. And at the macro view, again, you have to understand that everything is looking good. I just want you to be aware, so we can actually have a conversation about this. Is that back in 2007 and 2008, things felt pretty good that summer. In 2007, everything felt pretty good in that summer as well. The Dow, I believe, was trading at around 14,000, its highest all-time numbers, and then it had some shaky days in there. So what I'm explaining right now is for you to just be conscious and cognizant of this, that we are seeing similarities between the recession in 2007 and what's going on in the stock market today. So always just be on alert when it comes to these kind of rises up, these pushes up, because you're not seeing anybody really talk about the possibility of this market continuing at this great rate, because it's hitting numbers that are excellent, and that's great and wonderful and everything. But you have to understand also that corrections must and are expected to come, and we have to wonder whether October's tumultuous month for stocks is a sign of corrections to come for the markets as a whole, or if it was just a natural correction after an explosive and high, a lot of gains that had occurred in the summer. So make sure that you understand that correction could be just over the horizon. So be concerned and pay close attention over the next couple of weeks to the next couple of months to see whether this correction continues. And as stocks continue to trade lower today, it's just another indicator to be on alert right now for that correction. And that's it for me today. I'm Justin CCS, and that was Stock Talk Today. Have a good weekend, everybody.